As Bitcoin goes more mainstream under the Trump administration, we're seeing a shift in Wall Street's position on cryptocurrencies to capitalize on a potential boom in the market. For more, we're bringing in Jean-Marie Mognetti, his co-founder and CEO of CoinShares, which is one of the, I guess, older asset managers in the cryptocurrency space. So you've been doing this for a little while. So Jean-Marie, what do you make then of this sort of latest phase? It does seem to be spurred by a loosening in the administration, but it's also spurred a loosening on Wall Street, where they're starting to get more interested.
Yeah, thank you for having me, first of all. And you know, this industry has been built by retail at the very, very beginning. It was the retail investing first, and Wall Street came second when the regulatory framework started to be built up. So the SEC has been very slow to come with something. It's designing something as we speak. So Wall Street is progressively moving into it, and we have this kind of very paradoxical shift right now where we see the retail money being very worried about the tariff. We were just talking about it in the previous segment, and everything which is happening with the earnings on different AI company, and Wall Street, which is like effectively buying the dip on every single pullback on the Bitcoin price. It's a very kind of paradoxical sentiment that we didn't see before in the crypto industry.
Jeremy, there's been some good reports recently about how some of Wall Street's biggest banks are kind of plotting now how to win over more crypto business. The idea being they have, listen, Trump, big fan in the White House, and get ready, here comes a wave of IPOs and share sales. What do you make of that?
Look, Wall Street is not the enemy of its own interest, so the crypto industry has been a very, very flourishing industry since 2012 now. There is plenty of good company preparing for IPO in the US, so obviously they will need to get good support from good banks to do that. And I think BitGo, there was an announcement a couple of minutes ago on the news feed about BitGo filing for an IPO or thinking about filing for an IPO, so you see plenty of great company getting into that direction.
Do you see the Wall Street banks more as competition for a CoinShares, or more as a partner, or more as, you know, there's enough demand to sort of go around?
Look, the banks are not competitors to us. What we're doing is very much kind of complementary to what they do. We're offering investment services that they don't offer. We're offering an expertise that they don't always have. So it's kind of working hand in hand and like offering kind of different aspects. You know, like a lot of banks in the gold market offer billion services, but they don't offer they also offer paper services, and they also offer kind of in general investment services. It will be the same thing in crypto. You know, as thematic get wider, they will sophisticate as well, but you know, there's always space for people who were expert very early on.
You all did a survey recently, financial advisors getting their opinions on digital assets. What were some broad takeaways of that survey? Were there any data points that surprised you in that survey work?
Yeah, this survey was quite interesting because, you know, the idea that people are getting more aware of cryptocurrencies was kind of an obvious outcome of it. What was much more interesting for us is the perception of the crypto industry by the investment advisor, which are struggling to reconcile effectively this massive shift in wealth, which is happening from one generation to another, and which will force them to start looking at things like cryptocurrency because their new kind of investees are looking at cryptocurrency with very sharp eyes, and their lack of capacity to get good education, or what they perceive as unbiased education from cryptocurrencies firm. And that's where CoinShares is trying to effectively step up as the adult in the room and say, look, we understand your problematic, we understand you need unbiased information. We're not just here to tell you it's going to the moon, like the saying says, but we try to give reason and to give a bit more of thinking beyond what we propose. And it's funny because we had an advertising campaign in Germany in Q4, and the advertising campaign was work with the brokerage house, where the brokerage house was saying we need to tell our clients to not invest too much in cryptocurrency. So as a cryptocurrency investment firm, we were making a messaging saying be reasonable, be in the way you invest. You know, the same way a lot of lottery company make advertising saying gamble responsibly, drink responsibly. Well, we were trying to do invest responsibly as well, and don't just like put all your eggs in one basket and diversify.
And is that, do you diversify within the cryptocurrencies as well? I'm curious where you're allocated right now at CoinShares.
No, you can diversify outside of cryptocurrency. There's a lot of researches which has proved that having a little bit of cryptocurrencies in your, especially Bitcoin, in your investment portfolio goes a long way in terms of improving the risk-return parameters of your portfolio and its volatility-adjusted return as well. So it is a good thing to have as a diversification methodology. If you look at a risk premium portfolio, it has a lot of value as well. So there's plenty of things you can do. And you know, yes, we've been doing single coin ETF effectively in Europe for 10 years, but the future isn't really in that direction. We're not going to do in the US what we've been doing for 10 years in Europe. So the real future is like how you start mixing cryptocurrencies with traditional assets and bring better risk-adjusted products to the market.
Jean-Marie, I'm just curious. In that survey work you did, was there any kind of, did you pick up any kind of meaningful generational differences among advisors? Did younger advisors, did they seem to think differently about digital assets and maybe their relatively older colleagues and peers?
It's a good question you're asking, because effectively what we're seeing is like the peer pressure among financial advisors is very strong. And like they're very, very wary of what the older colleagues are going to think about them. So the younger generation pushing up is still very much looking at, okay, how is my boss going to look at me for doing that? We used to say in traditional cryptocurrency world that it used to be a risk for your career to invest in cryptocurrency, and now it's becoming a risk for your career not to do it. But when it comes to financial advisors, it's still perceived as a risk because the older generation of risk advisor are still not embracing it completely. And you can see this dichotomy the same way at the family table, when the dad or the mother or whoever is like running the portfolio of the family, which is the older generation, is being told by the kid or the daughter or the son, why don't you have Bitcoin in your portfolio? And then the Thanksgiving debate dinner table is transposing at the investment advisor kind of investment committee, where you get this generation kind of having a bit of friction together. It will take time, it will solve, and we want to position CoinShares, have this kind of tool for them to be able to help resolve that kind of narrative, I would say, breakout.
Jean-Marie, thanks for coming in. Appreciate it.
Thank you very much.
Good to see you.